Hello, welcome back to this week's market update. Today is Monday, January 6th, 2025. I hope everyone's new year is off to a great start. And with that, we will jump right in. The first week of the new year saw equities struggle to post gains during a relatively quiet week for economic data, as well as the New Year's holiday, causing stock markets to be closed on the 1st. As of close on Friday, January 3rd, the Dow Jones Industrial Average fell by 0.6%, followed by the Nasdaq Composite, which was down just about 0.5%, as well as the S&P 500 down also just shy of 0.5%. Bonds, on the other hand, did have a slightly positive week, with the Barclays Aggregate Bond Index up just about 0.2% as of close on Friday. Heading into this week's economic news, we had the Consumer Confidence Index come out from the Conference Board for the month of December. We saw a bit of a drop, about an 8.1 point drop in the index here to 104.7. And you can see that's nothing we haven't seen before. There's been drops before. You can see these here. It can be quite volatile. However, this is a bit of a drop given the kind of uptrend that we were in so far in 2024, and it reversed a lot of that there. Breaking it down a little bit more, we have the present situation as well as the expectations index, and expectations are really what drove this month's index lower. So here's the present situation index that dropped just slightly in December, while the expectations index fell much sharper here. You can see it is near the threshold of 80, which economists tend to view that as a recession warning signal. So we are just slightly above that recession warning signal, but we were below that for about 2 years here during this period, and we have yet to see a recession. So is that always a telltale sign of a recession? No. However, it does cause some concern as consumers are starting to have kind of lower expectations into the new year of the economy. On the contrary, we saw a data point, the ISM Manufacturing Index, actually improve last week to almost a neutral reading here. We can see it is bearish when it is below 50 and bullish when it is above 50. So we only had one slightly bullish month here in March of last year, 2024. Now in December, it ticked up slightly to 49.3. So it has been rising for the last 3 months here. But again, this is a very volatile data point, and overall, we have seen the index be quite bearish for quite some while. And then you throw in things like tariffs and a few other different, inflationary pressures and different supply chain issues and possible union strikes later on this month. And you can see why the manufacturing sector might have been struggling and may have a little bit more difficulty ahead. Also, last week we got Tesla's fourth quarter deliveries numbers. They missed expectations quite a bit, with the stock falling at nearly 6% on Thursday last week following the news. In the fourth quarter, they posted just 495,000 vehicles delivered versus the 510 that were expected. And then for full year 2024, they posted 1.78 million vehicles delivered versus the 1.8 that were expected. This was also the first year-over-year decline in vehicle deliveries for Tesla in all of its history, down from 2023's 1.8 million vehicles delivered. So just a small decrease from a year ago, although this is pretty notable given that this is the first year of decline for Tesla. They're really in kind of a make it or break it point. They've had a lot of momentum in the stock here, as you can see, but now the question is, will their performance continue to improve, or will they decline? So yet to be seen. We're pretty bullish on Tesla overall in the long term. However, they might see some difficulty in the short term with some weaker than expected results like this. Last but not least, it was a quieter week, but we also wanted to touch base on our recession indicators as we start off the new year, and several of these have been updated recently. We have the ADS index that's been neutral here in the last week. The ISM Manufacturing Index that is just barely bearish with an improvement in December's index here. The Services Index, that's what we'll be getting this week. That's been bullish for quite some while. The Leading Economic Indicators Index, the LEI there, that's been bearish for quite some while. The Philly BOS survey, that's been bearish as well. The Employment Trends Index, that's been bullish for quite some while. We've seen the labor market continue to be a source of strength for the economy and consumer spending. The Chicago Fed's National Activity Index, that's also been bearish here. And then last but not least, a quarterly index here, the Anxious Index, which is a measure of what forecasters think the probability of a recession is in the next few quarters. That was bullish in November, and we will soon get an update on that in February. So overall, 4 bearish, 3 bullish, and 1 neutral. Very mixed heading into the new year. With that, we thank you so much for tuning in to this week's market update, and we look forward to providing another update to you soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.